This is another episode of me documenting the day-to-day process that I am taking to achieve long-term consistency in the financial markets. And today, as you can see from the calendar, is another day of doing nothing, which is frustrating because my model was there perfectly, beautifully in price, delivered over a 100 handle swing. But yet again, I have not done anything. So I missed the move again. And if you look at the rest of my month, you can see that a lot of these days are gray. So I'm consistently missing the fucking move. And the constraint in my trading is I'm lacking conviction in the draw on liquidity, and I'm lacking conviction in the higher time frame narrative. And today I learned that if I lack conviction in the higher time frame narrative, what that daily candle should do, then I'm going to lack conviction in the draw on liquidity, or where the markets should trade to. So yet again, I approach today with the split approach where I'm looking for two different ideas, and what does that lead to? Intraday, indecision. Therefore, I can't confidently execute on the move that I know is likely to play out. I'm not able to get on side with it either when I know it's going to play out, and I do nothing. So, pretty frustrating, but I know that I'm like this fucking close to getting this shit down, getting my model down, really understanding my model, all the ins and outs, all the nuances, everything, start to finish, and I'm so close to just milking the absolute. I'm so close. I'm so close. I'm so fucking close. I'm so close. Anyways, let's get into it. Today, Tuesday, July 29th, 2025, we have no trades, so if we read my approach, we can see right away that I was very indecisive going into this day. Pre-market game plan. What is the draw on liquidity? I like the 315 gap on the 15-minute as the DOL because how price trades around that will tell me if I should be bullish or bearish today. So if I decide to opt to use my approach where I have a main idea and an alternate idea where I'm looking for two different things to potentially play out, this is where I'm like, okay, there's one level in the market that I know it should trade to regardless of if the market is bullish or bearish. How it trades around that at 9:30 is going to confirm if I should be bullish or bearish, which worked today, but because I still had that other idea on the back of my mind, that still is going to lead to indecision. So I'm learning right now that one idea, that's it, just one idea. Just have conviction in one idea, just go for that, be confident in that, and look for that to deliver. But in order for me to consistently do that, I have to get really good at establishing the higher time frame narrative and having confidence in that as well. So right away, you can see I'm split over two different ideas. What is my bias? The higher time frame narrative, I like the idea of today being an up close candle because of how the weekly chart is developed, creating an IR. This is just complete bullshit too. This idea was so stupid. And the push up in the overnight session, leaving a gap that is congruent on the hourly, 15, and 5-minute. This is stupid, okay? This is basically the only idea that I give the market to want to actually go higher because the IR on the weekly chart, if I pull up the chart, actually I have the annotation right here, right? I'm thinking that, so this is another form of immediate rebalance taught in the 2024 ICT mentorship, where the following candle has it gaps up, right, where it opens, trades down, touches the close of that candle, that's an immediate rebalance. So I was viewing that as immediate rebalance on the weekly chart. We're at all-time highs, still going to be bearish. It's basically the only reason that I could frame for the market to want to actually go higher today. But at the same time, look at this, read this. Whenever I use the words at the same time or how price trades around, that's how you know that I have no idea what the fuck I'm looking for going into 9:30. So at the same time, I could see the possibility for price to stay within Monday's range / fall back into it because tomorrow's FOMC, and how Monday's low form doesn't give me confidence that that's the low of the week. How this sets up could be a low resistance liquidity run lower to build the low of the weekly range, form it on Wednesday, form the low of the weekly range on Wednesday, then trade higher Thursday and Friday. Okay, so this is an alternate idea that I'm looking at, or this is the idea that made sense. Look how much more detail is put into this idea versus the first one, right? One doesn't make sense. It's just like, okay, it's just this. The other one's like, okay, it should do this because of X, Y, and Z. So this makes a lot more sense. And so how I wanted to trade around that 315 gap, initially I wanted to see it drop, rebalance the overnight range, leaving low resistance pre-market buy side intact into the gap mentioned in my plan for opportunity to buy it. But if it makes a new high day first, right, here's the alternate idea. If it makes a new high day first, that would make more sense for me to sell it, targeting that level. So main idea, bearish premium gap opening, looking for rebalance Monday's range. Tap the 15-minute gap, and then target pre-market low resistance buy side above. So that was if the market dropped lower initially at 9:30. But if it went higher initially, if price suddenly opens high on the day before 9:30 and fails at the high day, that would make sense for me to sell it targeting that gap. Okay, so let's go to the chart. Or should I walk through some of these? Maybe add some more details. Maybe not. Okay, so in this video, I kind of want to get some details on the process that I run through when I have like a frustrating trading day like today, and I'm trying to figure out exactly where I went wrong. So number one, the first thing that I have to do is number one, fill out this process, right? Number one, I just said number one twice. I have to fill out this to know exactly what I was thinking before the market opened at 9:30, because at the end of the day, I'm going to go back and review this and figure out exactly what I was thinking and where I went wrong in that. Right now, right here, I just outlined everything that I did wrong in my market approach only because I have this information here. So I know exactly what I was thinking, and I know why that was wrong, right? I approached today with a split approach. What did that lead to intraday? Indecision. I have two higher time frame narratives established. Number one doesn't make sense. Number two does make sense because it has X, Y, and Z details. Number one is only based off this one thing, right? And then the main ideas that I was looking for. So basically, split approach. If the market dropped lower first, let's take this off the 1 minute. Not that, just this. These are my after hours annotations. The market closes, then I go back and review it again. So just a lot of review, right? A lot of study, a lot of introspection. This can also be taken off the 15 minute, not necessary. Put it on the 5. Okay. So in the market setting up right here at 9:30, if it drops lower first, so this is my draw, right? The 315 gap. If it drops lower first at 9:30, taps this overnight range, I want to buy it targeting this high. If it did not take it, if it just opened and dropped lower. But what did it do instead? It opened, went for that high first, so now I know that it's likely to reverse lower for this gap. Even then, I still can't confidently execute on the sell here because I have my bullish idea on the back of my mind telling me maybe this is still good for a long because of the strength that the market initially showed at 9:30. So no matter how I do it, if I come to the market looking for two different ideas, it's going to lead to indecision, so I can't do that. I have to eliminate that. In order to eliminate that, I have to be extremely confident in establishing the higher time frame narrative and what the market should do based on the weekly chart, economic calendar, and how candles settle on the weekly and daily chart. Okay? So what did it do? It just traded higher. Let's go to the 5 minute. Now this day was especially frustrating because I should probably walk through the logic on the chart first. That would be ideal. Okay. First thing it does at 9:30, rallies up, delivers a buy side objective, takes the pre-market high, leaves, sell side below. So this is literally my bearish premium gap opening set up perfect in price. We have a new day opening gap that's still inefficient. It lacked sell side delivery because it gapped down here, opened here, and then just traded up. So it lacked sell side delivery. The market did not trade lower within this range, right? Pair that with previous day settlements in one area, that makes that a strong draw. Not only that, but look at all the low resistance overnight sell side. 3 reasons right there for the market to want to trade lower, supported by the higher time frame narrative that tomorrow's FOMC. So we're not likely to see a trending day. It's probably going to come back inside the range if it leaves Monday's high. We're not going to see a trending day before FOMC, right? It just doesn't happen. So higher time frame narrative today is likely to be a consolidation, and it was, right? Came back inside the range. So now I'm jumping all over the place. But anyways, a higher time frame narrative. Look how Monday's candle settled. It settled as basically an indecisive candle. That tells me the market's likely to consolidate before FOMC. And tomorrow is FOMC. So based on the economic calendar, we can expect today to be a consolidation or come back inside the range if it leaves the high of yesterday's range. So I'm just trying to figure out how the market is going to work around the previous day range based on the higher time frame narrative. Anyways, back to the 5 minute. First thing it does, open, trades higher, takes buy side. Now on the 1 minute, this is what really piqued my interest in the idea initially. This is what I was watching in real time. Okay, as we rally above this, at the time I'm stating, I'm reading this very bullish because of what price at pre-market, how it consolidated the previous day high on the 1 hour. Now it's just leaving previous day high at 9:30. Maybe it makes sense to buy this in the all-time high environment, but it's not my model, not something I can repeat. So initially at 9:35, you can see that I'm thinking the market's bullish. So I'm waiting for 10 o'clock to see if anything changes. I'd favor a strong up close on the 9 o'clock hourly candle and then drop back into the hourly consolidation range. Trying to fade this is not smart. I feel very selective today. So you can see that my mind is set on longs at 9:35, which is right here. Okay, then the market starts to do this, new information changes. Now I believe that if I approach today confidently looking for a sell, I could have just market order sold on the immediate rebalance that I saw right here. So we have this large down candle, gets immediately rebalanced, and the immediate rebalance also produces another larger down close candle. So that tells me, something probably changed. We could be bearish right now. Then this 5-minute range closes here. Let me find it, right? Now we have a large down close candle on the 5-minute time frame. I'm noticing how the next 5-minute range opened. Before this even was a large down close candle, I read the immediate rebalance and knew that it was going to paint as a large down close candle and do something like this, because the first thing that it does is it opened the new 5-minute range. You can see on the 1-minute time frame, it opened, traded up, tapped that 5-minute candle's low. So what is that doing? That's creating an immediate rebalance on the 5-minute now. So now I have an immediate rebalance on the 1-minute and the 5-minute. That's probably telling me that the market's about to break lower and it's going to disrespect this gap. Now I lacked conviction in selling this idea, just selling it at the market or being confident in this sell, and I waited too long and missed the fill because of this gap right here. And initially I thought the market was bullish, but I also approached the market with a bullish idea. So it all starts with the double approach leading to indecision intraday, right? But indecision in my market, or two ways split in my market approach, is because I don't have conviction in the higher time frame narrative or the drill on liquidity. So I'm reading this, and because I'm reading the 5-minute immediate rebalance before it happens, I want to see a down candle on the 1-minute overlap this up candle, and then I wanted to sell that short. So if I pull up the recording, right, reading this, okay, cool. And then you can see as the market makes the immediate rebalance, I start to annotate it. I'm like, oh shit, look at that. That's an immediate rebalance in the 1-minute. Okay, I might annotate that. That could mean something. At the same time, I see this fat gap in the 5-minute, right? And we're trading back down into it. So it's kind of hard to sell the market as it's trading back into it when you came to the market with half of a bullish bias. So now I'm annotating that gap on the 5-minute. I want to see signs that it's going to fail. And now I'm noticing how this candle's high tapped that candle's low. And I'm placing my sell limit order out there. I'm getting ready to sell this short when this gets overlapped by a down candle. So I think you can see the point at which I measure the immediate rebalance. I'm also noticing that tiny little separation on the 1-minute as well, right? So it creates the 5-minute immediate rebalance. It also creates, well, it also trades up into this tiny little gap on the 1-minute time frame. Let's see. See, I'm measuring. I'm like, okay, yeah, there's no separation between that candle's low and that candle's high. You just saw me measure it. So I'm like, okay, this is a 5-minute immediate rebalance developing in real time. So as it's painted like this, I know it's going to close large down close candle just because of what it did right there, immediate rebalance. And then I'm like, yep, this is kind of looking good for me. Let me get my sell limit order ready. Put it on there. Starts to break lower. I'm going to frame the risk on the trade. My stop is going to be above. Where did I put it? I guess I just threw it out there. It's kind of lacked preparation in this idea because I was bullish and then shit suddenly started to change when I read the 1-minute immediate rebalance, right? So my stop loss is going to be above the 5-minute immediate rebalance high, because if it really is bearish, it should just stay heavy and roll over from there. It should not take that candle's high. So even if this doesn't work out, like look at the risk on this trade. Look at the risk on this trade. It's well worth it. So one thing I'm also having to realize is that you got to just take setups that are just worth the fucking risk, like whether it plays out or not, because the risk on this is amazing. If I enter at the low of that with the stop, I'm risking 11 handles to make how much? I would have targeted that gap, right? That was my draw. To make 55.5, that's a 5R. Just fucking mark it in on that shit. That's worth it, you know? So I got my sell limit order out there. You can see right here. Now I wanted to see just like a solid down close candle close on its low and then sell the up candle right there. Now this is already a change in the state of delivery. This is already an order. It doesn't have to close over its low. And that's another little detail that I missed. That's what ICT also teaches in the 2024 mentorship. It just has to close. It just has to violate the open price of that candle. It doesn't have to close over its low. So I'm waiting for it to close over its low, although it doesn't have to. I would have really liked to see it do that. But in this moment, I'm not thinking, oh yeah, it doesn't have to close above it. It doesn't have to close below its low. It just has to close below the open price. That's in retrospect where I'm like, this is still a valid order block because it violated the open price. It doesn't have to close below its low. Like it's an order block before it closes below its low. If the open price is violated, it becomes an order block. So if this was a solid down candle on its low, that would have easily been a sell for me right there. I would have got tagged on this candle. Okay, I'm reading this right here. At the time, you can see how I was kind of moving my cursor around the consequent encroachment of that gap. I didn't like how the 1 minute was still closing above consequent encroachment of the 5 minute gap, because that would be a sign of strength. So you can see how at the same time, I'm reading the sell, at the same time, I'm looking for information that tells me it could go higher, which does what? Impacts my ability to confidently execute that sell, leading to what? Indecision. And then finally, I'm like, yeah, 100%. I've got the close over now. I'm taking this as a sell, dragging my stop to that candle's low, or not my stop, my limit order entry to that candle's low. Stop loss is going to go there. Top take profit is going to go there. So boom. And then what does it do? Goodbye. So yeah, it just left. So, I mean, that's been happening to me a lot. So I believe that if I confidently approach today just looking for a sell, because I put all the pieces together that makes up my intraday swing model, where it's like higher time frame narrative, draw on liquidity, pair. What am I looking for? A sell and a sell only. If I do that, I believe that I could confidently just sold short. Once I saw the 1 minute immediate rebalance, and then following that, the 5 minute immediate rebalance, I could just like, boom, yeah, I know this thing's going lower, right? But because I have those two ideas, balance, the split approach, whatever that I've developed, and I was like, okay, maybe it worked, because it worked a couple times earlier this month. But that was because I had absolute conviction in the market delivering one level, and that was when it actually worked, and I actually like executed on it. But still, even if I approach the market with a split decision or a split approach, it's going to make me feel that indecision intraday. So it's a process that I go through. You know, this is a frustrating day. So you can see that when I'm doing my reflection, how did I feel going into today? Nothing important worth noting. Slightly lower energy. What rules did I break this fall? None. What did I learn? Okay, so today really taught me a lot about what my model requires. So this motivated me to do a little bit of work on my model, right? And so I just cooked this up today. I'm a fucking grinder. Like, I get shit done, bro. I cooked up this entire page today, developing the foundation. I'm trying to figure out my model even more. So I got to ask myself, like, what am I trying to do? So today, the frustration with today and just my consistent inability to get on side with the move that I'm looking for and confidently execute on that, it makes me realize that I need to understand what I'm really trying to do here. And what is required from the market, like what does the market have to present for my model to be there? What is required of me? Well, it requires a lot of confidence in the draw on liquidity and a lot of confidence in the higher time frame narrative, because what I'm trying to do is play in line with the higher time frame narrative to catch the real swing in the AM session just 2 to 3 times a week, and that's all I need, right? And now I'm going to develop a new backtesting process that's more efficient, with a focus on data collection on the higher time frame narrative that makes the setup make sense, the criteria that sets it up, and execution and timing. It also should be draw on liquidity. And so here's what I lack. My model leans heavily on the higher time frame narrative, and I lack a true understanding of higher time frame narrative, framing that, establishing that. Then some actionable tasks about things that I'm going to do to actually solve this problem, right? And then I started working. Step 1, how I arrive at the higher time frame narrative, establish that. These are the 4 things that I use. It's really 3. I think I might delete this one, because basically these give me the condition of the daily or the weekly. But cross 2 of these for high probability bias. So how I arrive at higher time frame narrative, development of the weekly range, economic calendar, and settlement, where the candles close in the weekly and daily. These are the 3 things that I use to develop a higher time frame narrative, which gives me a good idea of how that daily range is likely to paint, which tells me where my focus should be for the day, what should I use as the draw on liquidity. If we even go to the chart today, was there really even a reason for the market to want to trade higher once it took this high out? No. There was a lot of reasons for it to trade lower, though. So at the end of the day, because today was more frustrating, my reflection is going to be centered around why did I get my approach wrong. So on the weekly chart, starting from the weekly, I'm going to do a top-down analysis again after the market is closed at 5 o'clock. Why is my higher time frame narrative incorrect? Where did I go wrong? I'm asking myself these hard questions that have to be answered so I can figure out a solution to the problem. Reasons to anticipate price to come back inside the range, higher time frame narrative. So now I'm framing the higher time frame narrative as if I had gotten it correct. So a good exercise that I always do that really developed my ability to read price was just annotating the charts in hindsight like you knew that was going to happen. And that's what I do. But today the focus was centered around just asking myself, like, why did I read this wrong? What did I not see? What were the things that I did wrong? So I thought in my pre-market approach that these down candles were going to support price, but it did not, because the higher time frame narrative calls for consolidation. And here's a crucial lesson that I learned about establishing the higher time frame narrative and why it made sense for the market to do this. So Monday's low leaves relative equal lows, which does not give me confidence in a low of week being in. So I can anticipate a drive above Monday high to fail to build the low of the weekly range if we're bullish, or form the high of the weekly range if we're bearish. So either way, a draw to Monday's low makes sense on a run above Monday daily high, supported by the higher time frame narrative. So either way, it makes sense to see it trade here regardless of if the weekly range is bullish or bearish. What made me lean bullish? I saw this consolidation range at Monday daily high, so I thought that would lead to continuation. Why doesn't it? Because of the higher time frame narrative. There's no higher time frame narrative between the market consolidating here and continuing higher. There is higher time frame narrative to see it come back inside the range though and complete a low resistance run on sell side liquidity. This video is 20 minutes long. I think that's probably going to be it for this one. 1 minute chart. And I'm just asking myself, or just rerunning the day through my mind and trying to figure out exactly where I went wrong. And this is stuff that I do every single day. If I click through all these, you're going to see the same thing over and over and over and over and over and over and over. So doing this process consistently, persistently, without fail every single day has allowed me to arrive at the model that I trade for. And now everything is extremely systematic, where I know exactly how I want the market to set up at 9:30. Now I'm just at the point where I had to get comfortable, I had to grow comfortable with my model, which is going to take some time, which is going to take a lot of back testing, a lot of reps, a lot more screen time to get a lot more experience, just get comfortable with doing the top-down process from higher time frame narrative, drawing liquidity, to actually executing on that intraday. And once I get really good at that, which there's no way that I can't get good at that. Like, I'm at a point right now where I absolutely know with full confidence that so long as I keep doing this process, eventually it's going to yield profitability. Like, I can't fail. I have the model. Like, everything is in place. Like, I'm so close. Like, the last piece is literally just being comfortable with this and consistently executing on it. That's it. That's the last piece, literally. And then eventually, once I prove myself profitable consistently in a demo, then I'm going to start doing an eval on a prop firm, and then we'll just see how it goes from there. It'll be up from there, right? So it'll be good. So the pieces are coming together. As you can tell, like, I'm really fucking close. They're fucking coming together. It's looking good, man. It's looking pretty good. And hopefully I can finally start making some money after 2.5 years doing this. I literally haven't made money in over 2.5 years. I've been living off of Bitcoin. Shout out Bitcoin. Let's see where Bitcoin's at. I haven't checked Bitcoin out in a minute. Let's see. 117K, not bad. Bitcoin's consolidating. This thing is not dropping. Take a look at ETH. I don't think we're dropping either. Look at this candle close. So what does that tell me? We're comfortable. Down candles should support price. We have yet to clear these highs right there. I don't think we're dropping an ETH either, so we should be good. So as long as Bitcoin keeps going up, then I still got money and I'm good. And by then, I'll be making more money off this shit. We're fucking good, baby. I'm so blessed. You're blessed too. Have a great fucking day.